Now, I told you not to put your money in a bank current account. And for those who don't know what a bank current account is that account for mainly for transactional purposes. Money is just there. It's not gaining any value or no capital gains, no interest, no nothing. Money is just there, keeping quiet. Now, the second account that I discourage most people from putting their money is this account called fixed deposits account. And I know I might get some debates in the comment section about the fixed deposit account because we have a lot of people doing fixed deposit account. But today I'm here to give you reasons or disadvantages of putting your money in a fixed deposit account. Now, I'm not going to tell you not to put your money there, but I'm going to give you the reasons why you should not put your money there. And of course, you are going to compare with other investment account and see which one gives you maximum benefits. Now, without wasting time, I'm going to my point number one, and my point number one is low interest rates, right? Low interest rates. Now, in bank fixed deposit account, these accounts give you low interest rates. Of course, you know, and the interest rate is from 8%. They are always less than 10%. And there is a bank, if there is a bank that is going to give you more than 10%, put it on the comment section so that we can look at it, right? Because si pia tunaweza taka kusaidiana. Kama kuna bank inapeana more than 10% fixed deposits, most ziko 8%, 7%, 6%, all right? But kama kuna yenye inapeana more than 10%, put it on the comment section ndo tujue ni gani so that we can save our money there. Now, number two on my list is fixed interest rates, all right? Fixed interest rates. And when I talk about fixed interest rates, I'm simply talking about that interest rate that does not change over the investment period. For example, if you put your money in a fixed deposit account for an interest rate of 6%, then it's going to remain that way for the rest of the investment period, either 1 year or 2 years. And you can imagine this one is so bad because if the interest rate is not going to change and it's low, then you see you are not gaining a lot of value there, all right? Number three is inflation rate. Higher. Now, imagine you have low interest rate, fixed interest rate, and inflation rate. It's this interest rate is being affected by the inflation rate. Now, assuming that here we are doing 7%. Now, this 7% is not increasing, it's just remaining the way it is, and it fixed for a period of time. Maybe you have decided to lock your money for 2 years or 1 year. And then it's also being affected by inflation rate, all right? It's also being affected by inflation rate. And number four, again, it's also being taxed. Of course, we normally say that income on interest or interest incomes are taxable by the government. I don't know whether it's 15% or something like that. 15% on the interest. And then, of course, our fourth disadvantage is taxation on interests, which is going to be taxed again after being affected by the rates of inflation. I don't know whether right now inflation is inachezea between 2.7% to 3% per annum, something like that. Now, number 5 on my list, we are talking about lock period. Lock period. And what I mean by lock period is whereby when after you have put your money in a bank account, then you are not supposed, you cannot terminate the contract between you and the bank, and you cannot withdraw your money. So it's going to be there for until the investment period ends. And one disadvantage is that if you have an emergency, you cannot be able to access your money. And another disadvantage is that if you have a business opportunity or an opportunity came just immediately without you knowing, you cannot be able to use this amount to take advantage of that. And if you can be able if you decide to withdraw this amount, right? If you decide to withdraw this amount for emergency purposes or that business opportunity yenye imekuja yenye imekupata, then there is disadvantage number 6. Kuna kitu inaitwa penalties on premature withdrawal. Yeah, when you do premature withdrawal, this is where you withdraw your money before the investment period lapses. And of course, the bank is going to impose some penalties on that, maybe probably 2% or 1%. Now imagine the interest rate was 7%, inflation rate is 3%, then you less 3, that is 4%, then another penalty of 2%. You see, you're almost being left with nothing. Number 7 on this again is what we call liquidity. And by liquidity, I mean that you cannot be able to settle or maybe pay your short-term debts, or maybe something or an opportunity that comes along with this money, because it's not money that you can be able to access anytime. It's not money that you can be able to access anytime. If you need money to access or maybe pay your bills and so on, then you cannot depend on this amount. Unlike in money market fund, whereby you invest, and in case of an emergency or a business opportunity, you can be able to use that amount. Yeah. And number 7 on my list, number 8, I mean, is what we call risk of bank going bankruptcy. Yeah, bankruptcy. Of course, although this one is not so much, but let us just mention it for the sake of mentioning, because you don't know, si kuna bank huwa zinafungwa. So the bank can go bankrupt, and of course, kama ulipesa zako zilikuwa hapo, you end up losing part of your money or maybe all your money. And number 9 on my list is what we call no capital gains. Yeah, pesa yako gain value and so on and so on. Now, those are the reasons I believe that you should not put your money in a fixed deposits account, not unlike other investments accounts such as money market fund, whereby your money is going to be compounded daily. But for this, interest is low, fixed interest, inflation rate in effect, your interest is taxed. At the lock period, you cannot be able to access your amount, penalties when you withdraw your money earlier, liquidity, you cannot be able to settle your debts or emergencies, bankruptcy, if the bank go bankrupt, then you are likely to lose part of your money. No capital gains, your money is not gaining any value. By the way, let me tell you guys, the banks will tend to tell you that if you save, for example, 100,000, let's say just an example of 100,000, if you save 100,000 or 1 million or 500K, the bank is going to give you a loan of maybe 80% to 100% of the loan of the money that you have saved. All right. Now, me nauliza, before you take a loan from the bank, did you consider the interest rate that the bank is giving you that loan? That is the first thing. Interest. The first thing is interest. Interest rate. Sana banks will do 18%, 20%, and so on and so on. The interest rate is very high. Number 2, if you needed a loan, why don't you go to a SACCO? I don't want to talk much about, because I have already have a video about the SACCOs. If you needed a loan, why don't you go to this SACCO? Kama ni loan unataka, then you save that amount. If you divide this 500K divided by 6 months is how many? Let me take my calculator. 500 divided by 6 months. Kama ni pesa ulikuwa unataka, so you can do 80,000 per month, 80K per month in a SACCO. Kama ni loan ulikuwa unataka, then after 6 months you go to a SACCO, this 500K yako itakuwa multiplied by 4, and you can be able to get a loan of 2 million if it's kama ni pesa ulikuwa unataka. But of course here you will have to have a good relationship with the guarantors or the members of the SACCO, so that you can be able to access this amount. But I'm just giving you and of course this amount you can get with the interest as low as 12% per annum, 12 to 13% per annum. Guys, I'm just giving you ideas. Don't run into banks to get loans, not unless kuna mahali nyumba inachomeka. But mine is just to offer you information, and of course so that you can be able to make the decisions that you're supposed to make. So guys, for now, today, that is our video. We meet in our next video. Now, John Mweri, professional accountant. Keep watching, keep following, keep commenting, keep liking. More information and good information to come. See you in our next video. See ya.